Canadian steel stocks down today as US President Donald Trump says he's going to be doubling tariffs on imports of steel and aluminum from 25% to 50%. On the other hand, silver stocks have been jumping with that metal near all-time highs. We're joined by Allan Small, Senior Investment Advisor at the Allan Small Financial Group, IA Private Wealth. Great to see you, and thanks very much for coming in.
Thanks for having me.
We've heard, Reuters had a story today, and I don't think it's a new theme, that the market's become sort of immune to Trump's tariff threats and pronouncements. But certainly we're seeing a pretty big move in these US steel players today, upwards.
Yeah, I think they have become, to a certain degree, immune. However, when you double down and you go from a 25% tariff to a 50% tariff, I think that gets the attention of everybody, obviously investors and the industry, whatever industry he's doubling down on. So in this case, steel and aluminum. So it's all about prices going higher, right? Every time we hear about a new tariff or a doubling of a tariff or an increase in a tariff, it's all about prices going up. Obviously, it will affect many different things, and the end consumer will eventually be affected, no matter what the president wants. You know, he wants to see these businesses swallow the gains or swallow the higher prices. I just don't think it's going to be possible. You're going to see right across the board, steel and aluminum tin cans, aluminum in planes. It's everywhere. And so the prices of everything going to continue to rise. We haven't seen it as yet, but I think everybody's bracing for it.
For all this talk of wanting to boost U.S. manufacturing, he's hurting them here.
Yeah, he says, make America great again. It seems like you make other countries great again, but America seems to be suffering the most. We've seen their stock market suffer the most initially. It's bounced back. But overall, prices are poised to go higher. And I think it's just a matter of time when we see that. Every jobs report that we see, every PCE or CPI data that comes out, we're all waiting for that first sign that we're going to see jobs fall and inflation rise. We just haven't seen it as yet, which is interesting. When will we get that first uptick or a significant uptick in prices and job loss? That remains to be seen.
It doesn't seem long before inflation heats up again. Walmart warned, as you know, a couple of weeks ago, we're going to have to rise prices. And in fact, I think the CFO said we've never seen such a surge of increasing costs as has happened.
Yeah, absolutely. And then the president went back to Walmart and says, well, you should swallow the price increases. And, what CEO is going to swallow the price increases? I think what he then did say was, okay, we can maybe get by with some with limited price increases, but price increases are going to have to happen. We heard it from early on from Amazon wanting to split out the tariffs costs versus the actual price of the good, and the president didn't like that too much. We're hearing many retailers talk about raising prices over the coming months, and it's just a matter of time.
What about Canadian retailers? Do any of them interest you right now?
Right now, I'm kind of staying away from Canadian retailers. I know names like Canadian Tire having a big surge recently with a nice dividend. But you wonder how the tariffs put on U.S. goods and then the reciprocal side of things, what Canada is going to do to reciprocate. What are we going to do down the road if tariffs get worse, if the trade war gets worse? So I think there's a lot of worry on both sides. Prices are going to go up, and we're obviously seeing prices go up already, even before the tariffs. So it's tough. It's tough to be a retailer right now. Margins are being squeezed, and it's quite amazing how Canadian Tire can reach new highs at this point.
Can I talk to you about a takeover we just had, Interrent? You probably saw that, one of the an apartment REIT, and it's being taken over partly by Singapore's sovereign wealth fund. And Andy Willis in the Globe today says this suggests that these apartment REITs in the Canadian market may be cheap.
Yeah, I think real estate in general has gotten a lot cheaper, and I think you're going to see perhaps more takeover of that type or in that sector. I'm surprised we haven't seen more of them, to be honest. Obviously, this one, a takeover from a company outside or a business outside of Canada, but it doesn't surprise me, right? Real estate has been challenged recently. We had higher interest rates, where it was challenging. Now we're seeing, obviously, an economy slowing down. That is affecting the real estate market, whether it's rental income, whether it's households, whether it's industrial, depending on what type of REIT you're looking at. I just think that's a tip of the iceberg. I think you could see more coming in the future.
What about in particular apartment REITs? I mean, they have an attraction. People need somewhere to live.
That's right. And right now, with costs rising, many are, and only have been now for quite some time, I would imagine. Rentals, trying to find a rental property, obviously in the Toronto area, GTA, quite expensive to do. So you're right. It is definitely a place where those have been moving towards, especially with housing as expensive as it has been.
I think it could be interesting if we explored the idea of telling CPP Investment Board, you got to use 15% of your assets to build apartment blocks in Canada. Just tell them that, commercial apartment blocks.
Yeah, that would be interesting. Well, they're invested heavily in the U.S. now, as we've
almost
heard.
half their assets, yeah.
So, and that doesn't surprise me again, right? And it's interesting. Those recently have been saying, do we move out of the U.S.? We don't want to invest in the U.S. anymore. I had a number of investors talk about staying in Canada for their investments. Then you hear CPP investing almost half their assets in the U.S. or outside of Canada. And then everyone's saying, well, CPP's doing it, it must be a good idea. So leading the way, I guess.
Yeah, they're down. They're below 20% in Canada. I think I saw a number 12% of their assets in this country. They can't find decent business people to back here. Well,
I just think the market is much smaller here, especially with the recent sell-off. And the U.S. has been the more dominant market prior to this year for most of the last decade. So I understand why they've gone down south.
Allan Small is sticking with us very kindly for a second block. After this, he said, in all this trade to and fro, the US-China confrontation is the one to watch. We'll be right back.